I'll answer a few questions that were in chat first. Excuse me. So the first one up here, I need a blank screen for this. Go get it in Fractal chat real quick. So let me read the question. I'll put the photo up. So it's just, when you speak about a swing formation in the video, you mentioned that if there's no point of interest, you can use opposing candles to anticipate a continuation. However, in the chart in the lecture, why isn't this considered a candle 2 closure at the low? How's it different? Let me just talk over this really quick. I think so. When I'm speaking about this example here, let's just talk through it. I'm not saying this isn't a candle 2 closure, right? Let's go over this. Ready? Candle 1, candle 2, candle 3. Oh, this is candle 1, candle 2, candle 3. Okay, and then if we go bearish, candle 1, candle 2, candle 3, 4, 5. Right, and then bullish, this is a candle 2, the candle 1, and this is a candle 2 closure, right? But when I'm talking about this in the sense that I'm not talking about the reversal, I'm talking about the continue, right? So if you notice, I'm talking about up here. What I mean is all swings have to form at a point of interest. So this one down here, it forms at a point of interest because it's taking out a low. So that's a candle 2 closure forming at a swing low. If you notice, is there a fair value gap or a swing low to get taken out in here in this range up? No. So that's when I can use the opposing candle. If it lacks all points of interest, then no, it doesn't. I'm not considering it at all. Does that make sense? So like if we just have a random candle 2 closure, like this didn't exist over here, I'm not looking at it, right? So this one, right, if it just occurred in a random spot of the range, no. That makes sense? D1 low doesn't consider, no, because this isn't a point of interest. Let's go to an actual chart. This isn't a point of interest. That's just my model, right? A point of interest is a swing high or low, a fair value. Right? So now we have a fair value gap here. That's a point of interest. You don't just take, another thing I see people do that's wrong is, find one we'll do. Maybe I'll go to the hour. Like they'll do something like this. They'll say, here's the difference. Okay? They'll say, oh, here's a point of interest because it came and let's say it did this. They'll say, oh, it swept out this high here. That's not a point of interest. Why? It's not a swing high or low. You need the swing high. Okay. And you can't just, this isn't considered a point of interest. That's just candle 1. So here's the logic, right? If you're in a range, right? For example, we're in this range here. I'm just going to draw stuff. Go here. So put it like this. Let's say we're looking at this as a reversal and then looking for a continuation, right? So this is candle 2, and we'll say this is the start of candle 3. Something like that. Cool. Right? So We swept out candle 1. We have the change in the state of delivery. And so where this occurs is, hey, I want to be looking for a swing in here. Right? Now looking at this, do we have a point of interest here? Yeah, we have a fair value gap. So then that's it. We look for a swing in the fair value gap, we then trade it, right? Because that's our point of interest, right? Now we'll find another example with a high, or we could do it over here, right? We say, oh, right here, we have a high, gets swept out. That can be our point of interest. What I mean, the only time I'll use opposing candles is something like this. Ready? We're coming into candle 2 or candle 3 here, and I look left. Do I have any fair value gaps? No. Do I have a swing low? If my whole idea is that this forms the low to trade it higher, do I want to see this swept out? No, that doesn't make sense. So that's when I will use the opposing candle as my point. But in the chart you were showing, it seemed to be sweeping out the low from before. Yeah, that's the point of interest. See if I can. Okay, ready? Here's a candle 2 closure, right? Why can we consider this one? Did it hit a point of interest? Yes, it swept out this low. That makes sense? You have to have the point of interest with the candle closure. So if it did that, why can't you trade C3? You can. My whole point, the whole point of this in the course, right? I'm not talking about any of this. I went over that, right? If you go to the section right before it where I'm saying, hey, I'm looking for swings at swing low highs or lows. In this specific case, all I am showing is when would I actually use the opposing candle as a point of interest. This is the only time I would, right? In this scenario here, right here. So I'm not talking about this down here. I'm not saying it doesn't exist, because this is candle 1, that's 2. Could you trade this candle? Sure, you could. Right, but that's not what I'm talking about. I'm not talking about when I would use opposing candles. So it's just like the point I'm trying to prove. And low or high has to be a swing high or low. Yes. I'm not going to just say, this is a point of interest because it swept out the previous. That's not a point of interest. Point of interest has to be a swing high or low. Right? I can't come in here. That's not a great one, but I can't come in here like this and say this. It swept out the previous candle. There's no point of interest there, right? None. I need a point of interest, which would be a high or low, in this case, low. Then price sweeps it out. Okay, we don't have a candle 3 closure or that, right? So I can't take anything on until we get, oh, new swing. Now I could trade this candle. Right? And if I go to 3-minute, you'll see that. Right? There we go. Yes. Why do you use opposing candles as your last resort? It's because after I taught this and had people learn my model for a few months, the amount of times I saw this, where we're going to adjust this a little, it'd be like this, right? We're just going to it would look like this, right? And what would happen is price would come into here, it'd form a low, people would take this entry, but that low doesn't make sense, right? Because now what is it doing? It's making equal lows with this, right? So then what would happen is all these people who were taking losses would do this. Boom, 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 boom. They're like, why am I taking this loss? Why am I taking this loss? And eventually I reached a point where I'm like, okay, this isn't a person problem. This is my course problem, because if many people are doing it, it's not on them, it's on me. So how did I adjust the course? Well, if you remember, after 6 months or so, I rewrote the course to say I'm only using fair value gaps or lows. Unless none are there, then I will use the opposing candles. So If it looked like this instead, okay, now I can use the point of interest. Right? That's why. Are you always waiting for a candle 2 closure on higher time frame? Not always. Like for instance, today, I didn't trade it. It's not very clean to me. But if we take a look at ES, right, we take a look at the hourly, and this is what I was talking about, where I was viewing this as a range, right? Because I don't really have any interest in trading long after this. Like it's just very overextended to me. So I'm taking a look. What do I see? This inside candle, right? We're just trading inside this range. I'm viewing this as a range, and this will also lead into someone else's question they asked me. So if I'm viewing this as a range, what do I want to wait for? Do I want to trade inside this range out? No. Do I want to trade inside this range down? No. I want to say wait for external highs and then go. So like that's why if you go to my analysis for the past day, I said I'm only interested in previous day high sweep. Okay. Take a look. Take a look at the analysis. Only interest is trading short off previous day high or with SMT off previous day high. There's no bullish swing taken. So basically I'm saying we're overextended on the daily. The only thing that interests me is yesterday even, if we would have traded, taken out previous day high, then shorting. Or today, taking out previous day's highs, shorting, right? And I want it paired with an SMT ideally. That's all I'm saying. So then, do this, and I view it as, this is when I posted about it, was, that's a nice reaction, right? Because I'm viewing it as expansion to that high, we have displacement back in. I'm viewing it as, okay, we're sweeping out this high, we can trade back in. Now, as for the question, why when it was right in here, I said, my anticipation is just, I'm just looking for these lows. Like I'm not expecting a whole lot. Why was that? Well, if you're taking a look at the daily candle, right? Where are we opening up? We're opening up here. So if we open up there, go all the way up there, do I expect price to go all the way down there? No, right? A lot of range. I'm looking more so back towards the daily open or that liquidity resting there. So it would be a lot different if, let's say this, right? Say price opens up instead of right there. Let's say price opens up here. Then what? Then we can sweep, and then we can go trade to that low. Because now we've only had, instead of, you think of my rope analogy, we only have so much rope for each day. If we go all the way up there and back, that's kind of the same amount of rope as there to there. Straighten it out. So that's my whole idea of why I was looking for just that area, plus it's just equal lows intraday. So if you're, what I mean by that is if we go to something like a 15-minute and take a look intraday, we have equal lows intraday. So I'll just clean it up. Completely equal lows right there. So looking at nothing else but the daily profile, equal lows, we trade higher, we have a reversal, right? So then I'm just expecting a continuation into that low. That's all. So that's like an example of, I don't need a higher time frame candle 2 closure to anticipate it, right? But here's the thing. Why would I say, like you'll hear me ask or tell a lot of people like, hey, I'm struggling, what do I wait for? This, I'll just say wait for a candle 2 closure on the higher time frame. Because if you sit on the higher time frame, right, this is still a difficult day, right? Like trying to trade this is a difficult day, right? Versus trying to trade something like this, very one-sided, right? One-sided. This is more one-sided. So if you're just patient enough to wait for the candle 2 closures, it's very one-sided. Do you have to? Right. Opposing candles have to be a valid CISD? Yeah. Candle 1 doesn't have to be considered a key level. No, candle 1 is just the candle before candle 2. A key level is actually a key level. Do I use 2-stage SMT? Here it said he's going to put me on, so I shall study. Do you provide your one-shot, one-kill Excel spreadsheet in this Discord? Oh, that's Adam. Nice analogy with the rope. Yeah, so let's go over the rope analogy. for everyone real quick. This is how I view it, is when you think about candles, right? Let's take a look at these. We'll go back a few. So this is how I view it, right? Each candle, it only has so much time. You see that? There to there. So why do I say I want to be entering earlier in the candle? Well, if I'm earlier into the candle, that gives me more time to have a trade, right? If I'm trying to enter right at the end of the candle, is it really make sense for the candle to just do all its expansion in 1 minute, basically? No. Right? So we have so much time and so much range. So the way I view it is this. Let's say we go into a day, right? And it uses all of its time. It doesn't go anywhere. Do I really expect it to expand at the very end? No, right? So that's where I avoid. That's why you'll hear me talk about, I want to enter early into that candle. Right? The next one is, let's say price already expands. It already used all its rope. Does it make sense to try to enter here and it's going to keep going? Not really, right? So that's why when we have an open low, a very shallow wick, right? And we have that intra-candle change in state delivery early into the candle, what does it mean? It means I'm expecting this candle to expand and I have what? Time. All this time left. So that's where I can get on side and it trends, right? Versus something like this, right? We trade lower. What? We've already used a lot of our range, right? So does it make sense for us to expand all the way up? No. And that's where the reversal candle comes in. We want to see it trade back towards the open. So that's why, going back to today, I was viewing it as, hey, did we make a shallow wick and then can trade it lower? No, right? We kind of moved all the way up into these highs. So using a lot of our rope, I only saw that much rope left, right? Can it do more? Sure. Do I expect that? No. Was NQ a valid candle 3 closure? Yeah. On the daily, it is. So here, if we're in a range on ES, I would rather use ES to frame NQ. I think AM did that today as well. I haven't checked, but that would make sense how he trades if he did that. So like what he would do is, okay, ES took this high. I'm expecting it to trade lower, but what? If I'm expecting this to trade lower, does it make sense to take the stronger asset, ES up here, or NQ, which is weaker? Q, right? So then this is when we have SMT from all the way up at these highs, right? So then I can look to be getting short after a London reversal for this New Year continue. And then right at the same time we hit those lows on ES, we hit the previous day. That's ideally where you want to be out of some of your position, and then you can hold runners. And if I'm holding runners, it's kind of the same idea of, okay, where's my target on these? I can target stuff like this. Like that makes sense as a target. Or I can go back to ES and say what? Okay, well, if we're going to trade to this range low, I can just hold my NQ trade until ES hits the range low and then get out of it there, right? So you can use the assets to trade each other. But was it a valid candle 3 closure? Well, if we take a look at this, right, indicator, go to NQ, right, we do have a valid candle 3 closure. Pull it back. And here's the thing that I'm not a huge fan of here is, let's talk about a few things. You know, with how I view opposing candles, we have expansion, retracement. If this was going to retrace and expand lower, let me double check my audio is still going. It is. I want to see price close right below this and go, right? Close below and go. When it fails to do that and it starts to chop around, I just view this as a consolidation. So then generally I want to see this high ran out before shorting. Oh, there we go. Get the high taken out. Now that's where I want to look to short. Right? That makes sense? I just think that's an important lesson. When I watch the example trades, I get confused in the sense that sometimes you use a point of interest or candle 2 closures, sometimes ISD, depending on. I'm a bit confused where you're getting confused. So no matter the time frame, it's always using a candle 2 or a candle 3 closure, and then I'll use the lower time frame to look for the CISD. And then those, so there's a difference between, let's just go use this example for now, right? Let's say we're looking at this reversal here. It needs to be off a point of interest. Okay, we have a swing low right there, a previous day's low. Right? Do I have a candle 2 closure? No. Do I have a candle 3 closure? Yes. But going back to here, I can look to be long in here, but what do I need? I need a change to delivery, in which case I can use this, right? I change the state of delivery. And so then now I could say, okay, this isn't a great example, but now I need a point of interest, right? And what do I mean by point of interest? Do I mean price needs to go all the way back down to there? No, because of the EQ, right? I'm looking, there's a fair value gap, there's a fair value gap. Okay, so we have a little fair value gap in here, reaches into, closes over there. That's valid enough for me. Buy. Stop loss on that. The candle changes the state of delivery and goes. So the difference is a point of interest for the actual swing to form, which is the higher time frame, versus the point of interest for an entry to form, which is a continuation. But the CISD itself, what do you use? The CISD is always the series of down close candles that form the low. So we can go anywhere, right? Right. We can just choose a random high or low. Okay, we'll go there. So same thing. Do I have a point of interest? Do. Right, it sweeps out a low. And then I look, do I have a candle 2 closure? Yes. In this case, it's actually an ideal one. Now, a lot of people think an ideal one is just because it closes over the body of candle 1. That's not true. It's ideal because it closes over the series of down close. That's a side note. But going back to it, we have a candle 2 closure. It's always going to be the same. I mark out the low, go to the 5-minute. Where is the low? There is the low. Then I'm just going to do this. Don't think too much. Find the low, go. Okay, down close candle, down close candle, down close candle, down close. All right, that's the last down close one. Mark that out. That's my change in the state delivery. So now, once again, here. What do I have? I have all of these. I'm not a fan of us taking out these highs already, but as we open up, do I have a point of interest, right? Well, I have a fair value gap here. So that's where we'd have to form a swing for a continuation. But what? I want to be in this continuation prior to these highs getting taken out. So let's see. Oh, it already got taken out, so I'm not interested. That's one I would just miss. But does that make sense? The difference between the point of interest for a swing, the higher time frame, so here we sweep out a low to form this swing, and the point of interest for the actual entry. The point of interest for the entry is you just find the low, you find the high that we're in currently, and you look inside here. Where's the point of interest? What do I use for the 2 steps you've mentioned? So go to section 1 of my course where it says change in the state of delivery. I'm always finding the low. I find the series of candles that made that low. Here's a high. Where are the series of candles that made that high? Find the high. Green, green, green. Okay, that stops. That's my change. Here's a low. All right. Find the down close, down close, down. Oh, that's where it stops. There's my change. It's very mechanical. In the case of that kind of entries, if you get stopped out, would you wait for structure? Yeah, I mean, if you're taking an entry, the only time I'd take an entry, like if you're talking about this, like this, right? Here's the only reason it makes sense to me, right? Because I'm taking a look. Where's our fair value gap? Here's our last point of entry. That's already below the T spot. I don't really care to see price trade all the way down. See how this is all balanced out? Here's the fair value gap. Would I just long this right away with my stop here? No, because that's not an opposing candle. Okay, so, but I can use this fair value gap as an entry. Now, if you're taking entries that you feel are more risky, size down because you might get stopped out. Okay? But generally, the only time these ones work is when New York reversal, because generally what happens in a New York reversal is you have this down 930 or whatever forms this, and then it just rips, right? And a lot of times it just never retraces, which is kind of the case here. Using OB continuation, can we trust that low will hold? So using order block continuations as defined by my course, that's always the same. Reach into a point of interest and then close over the down close candle. Let's see if there's any bearish setup in here. Yeah, all right, cool. Bearish setup here. Let's go over this one. So here we have a bearish setup. Now we're into the next candle. It's the same thing, right? So I'm always, for my point of interest, I'm always just looking into candle 2's range. That's it. There's candle 2's range. I'm going to look in the lower half of it. What's in this lower half? Okay, well, we have a high there. We also have a high here. So in my mind, does it make sense for price to trade all the way up into this fair value gap or whatever's up here if there's a fair value gap to then go lower? No, because that's bullish. Why wouldn't it just take out that high at that point? So I'd want to either see this form the high or this form the high. And then this is where it comes to waiting for the continuation. Sit here. Oh, does it look like we're going to just take out this high and leave it? No, we're awful close to that high. Plus, where would we have to close below? I just cannot hit the keyboard today. All right. And now this is just kind of a consolidation. Right, there we take out the high in this little consolidation, plus taking out this high. And so since we have a new high, now we have a new set of opposing candles. Oh, nice. We have a candle 2 closure at a point of interest, sweeping out this high. That's also forming those opposing candles. So now what? Now I've expected this wick to have formed and this. So I could look to take an entry if I wanted, which is, I can short in there. Okay. On this, I can either look to enter the close or look for a retest. Here, I'd probably look for something like that. Because I want to try to get 2R to these fib extensions. I have no idea what's left and I'm not looking. There we get tagged in. There we go. Makes sense? So I'm not really, like, I don't decide which ones to trust. It's just, I trust it because it hit a point of interest and then it just meets all my mechanical criteria. This is also a continuation. I just would never catch this because it already expanded, but reach into the fair value gap, closes below. So then once this candle forms, if I'm still in this position, I can trail my stop to there because now it's protected. Given that ES at highs and NQ is lagging, can we continue to trade higher? I haven't even looked, honestly. I just know that we reversed off previous day low. So if we reverse off previous day low, that means we should trade to the high in the range, which is, we're looking at NQ, these highs. Does it make sense for it to happen all today? Not really for me. So I'd be mainly looking at just highs that are relevant in here. Not relevant, but just prominent. Something like that. But you have to think about it. Anything like this is just extra. Your main targets on these reversals are those overnight lows. That's your first target. Like if you're in a long here, I don't know, Garrett, if you're in here, did you take that? If Garrett is in there, takes that, probably going to take something like this. You'd probably be long somewhere in here. Just stop in there. But it's like, because that's the 3-minute model. We'll rewind. 30. And so that's where it just prints my bullish model. We have a candle 3 closure, right? Expecting the reversal. But all I mean is, if I'm long in here, this is my first target. I mean, you can do 2R, but I mean, this is my first actual target because that's the overnight lows. So it hits that. Anything beyond that is extra, right? So if he's holding runners, whoever's holding runners, you're holding a smaller part of your position and expecting for more. When in reality, like, this is your main target. Does it matter that the C2 is formed at a key level or fair value gap? Yes. You need to have the swing formed at a key level or point of interest. That is a main component of my model. Right? This candle 2 closure, or candle 3 closure, formed at a key level, sweeping out a low. Can you look for an entry once the CISD is validated, even if candle 2 is not closed yet? So with that, JP, I would say hop into the course, pull up the good old flow chart, and see what it starts with. I'll just squeeze over to Figma real quick and pull up my course. What does it say here? If you guys don't refer to this, there's a reason I made it. All right. What is these first steps? Is there a candle 2 closure on the higher time frame? No. Yes or no? So does that answer your question? There needs to be a higher time frame candle closure for my model. Can't skip that. You can't go, oh, I would be doing this. Ready? If we bring it back up, you'd be doing this. Okay, we have an idea. I don't like these steps, so I'm just going to skip it to that. Okay, now I can take an entry. That's just not how my model works. My model follows the flow chart. Spent quite a bit of time making a model that can follow a flow chart. So, in a recent example, the ICISD wasn't in the new candle, it was in the previous candle. You don't have to wait for the opposing candle in C3. Does anyone have any links to the TT lesson? If you go into TT lessons, or I don't know if anyone has previous live streams for that. And if you do, any way you could do this. Let's see. I don't know if you guys saw the new channel. It's just the recommended streams. But if you go into here, second, we have these new channels where you guys can share these. If you go in, go ahead and drop your favorite live streams or what you picked out of them, because it will help everyone. But I have quite a few examples in live streams talking about when we form a protected swing right before it. And I think, funny enough, this is, JP was talking about it, because that was it. So if you want a good reference, you can go to my June 25th live stream at minute 38, and then he talks about it, or I talk about it. But you take a look, you can enter at the C4 open, right? Because we already have that protected swing form, right? So what it means by that is, if we have my invalidation forming, I'm going to draw because I'm not going to be able to find an example quickly. Okay, we have something like this. Do a better drawing. This, right? Let's say it looks like this, where here's our candle 1, candle 2, candle 3. Candle 2 has that and that, right? So if you understand opposing candles, we're not expecting price to go trade below this low here, right? Because it's protected. So I'd want to see price expand higher. Now, do I really want to see it come back into here, form a new opposing candle, then go? You could. Preferably, I would just see it expand, right? Because the longer it hangs around in this, the longer you can just consider that a consolidation. Once that's a consolidation, it sweeps the low, then goes, right? So all it means is, if we form the invalidation right at the open of the next candle, or right before it, I don't really need an intra-candle change in the state delivery, because I just expect this higher time frame wick not to go down into there, right? So I can just enter, my stops there. I think maybe if you other people have examples or links to the ones I talked about in there, it'd be helpful. Can you explain how to use the 1 minute as an entry in an hourly C2? I personally wouldn't. I have before, but it's very rare. Personally, I would think most people stay away from the 1 minute. You're gonna be better off. In my year-ish of experience of teaching people this model, you're just gonna get chopped up mostly. So that's gonna be my answer for you because I'm trying to help you, not ego your way through something. Could you explain when to use this 30-minute C2? Yeah, we can talk. We can even. And maybe. This is generally when I'll use something, right? Is with the lower time frame. But let's say we have something on the hourly that's a bit extended, right? This is where I'm like, okay, I could enter this next candle in the 5 minute, but I'm going to likely have a large stop. Generally, if we're going to expand the expansion, that's when I am on the 30. But it was on the hour. Anyways, then I would go to the 15 because now we're going to form swing. Yeah. Let me see if I can find a better example. Basically, I like to use the hourly. If the hourly is not that clean, or I want to refine it down, then I'll use it. The 30th. Right. I don't know how to explain when I use both because it's not like mechanical in that way. It's just I view it like this, right? I know a certain area I want to be shorting, right? Whether it's just here, anything like that. Like I know the area I want to be shorting. So if I see us reach into that area and in the hourly just doesn't look like it's going to give something, I could refine it down a little and wait for a swing on the 30, right? I don't know. Garrett, are you in here or someone else could explain that? I don't have like a mechanical way for deciding if I use the hourly or the 30. It's more so to me just what looks clean. I mean, wait, let's maybe something like this. Right? Maybe I'm like, okay, I want to trade this reversal long here or this fair value gap. And I see that this hourly is forming a reversal, right? But it's not a candle 2 closure. I could say, okay, what does a 30 look like? And not a great example here. Obviously, it doesn't work, but sometimes it'll be like this. Oh, now we have a reversal 30. Create that. It's just not mechanical, so I can't, like, that's more of a experience discretionary thing. I don't have anything there for that. How do you decide whether to use a market enter or limit? I almost never limit. I almost always market. Here's the thing, right? Let's say this is it. Let's say I can take a market entry on this close. And let's say my target is here. If I can enter on the close here, right, and get 2R, we're gonna do it like there. Right, let's say price closes here, right? And I'm like, okay, with my stop at the invalidation, my stop there, I'm getting 2R. I'm just gonna take the entry, right? Because I'm getting 2R. Like, why would I be greedy for 7 points and miss an entire trade, right? That's something where I'm gonna take a market entry. Where I'm gonna take a limit entry is something like this, where let's say it does that. Does it make sense to take a market entry now? No, it doesn't, right? Not even close. So then this is something where I'm either gonna look to set a limit, but I don't prefer limits. I would rather just see what it reach into here, and then once it forms a swing, I'd enter there, stop there, right? Like I'd still just prefer another continue. I just don't prefer limit, and I just kind of repeat the same thing where, okay, as long as it's not like above there, like this one, it's like I'm probably gonna have to get filled right around there. So then maybe I limit entry. Right? With bearish in mind, should I consider if the first 5-minute candle closes above the point of interest? Yeah, I mean, so here's how I view it. Is say, I mean, we can just use NQ today. Look at that. Hourly, daily. This. Like this, right? Here we have a candle 3 closure. We're looking for this area to hold, right? Now, if it closes over the EQ or the point of interest for you, for example, right? Let's say there's a fair value gap in here, or let's just say this makes sense. Price goes and closes over that. You're asking, should you invalidate the whole setup? It kind of depends. A lot of times it's not going to have that nice expansion, right? In this case, you could still consider it to expand. But what I mean is, generally when we look to expand, we have a small wick and it just goes, right? So when price goes and closes over EQ, it doesn't mean it's invalidated and it's just going to trade higher. What it means is going back to the rope analogy. If we go too high, we adjust our targets from looking for a large move lower to looking for back towards the opening price. So all it means is you need an adjustment into where what your expectations are. Does that make sense, no Rash? Yeah, so it's like, it's not a great sign, but a lot of times what I like to do there is this, right? If price is going to trade very high, what do we know? We want to trade after those reversal candles. So then I can just wait. If this forms a reversal candle, when does the expansion occur? The next candle, right? That makes sense? So a lot of times what you'll see is, let me see if I can find it a little bit. It'll be like a reversal with a reversal candle inside of it. They're very specific, like that. That's not a bad one. It's not great, but not bad. It's kind of like this. But let's say this was a candle 2 closure here, the second one, right? It looked like this for the sake of things, right? We're looking for this next candle to expand lower, right? What do we notice? It trades way too high, right? So one, we don't want to try to short up here because I could just take out this high. But two, if it goes too high, I lower my expectations. I'd expect it to go back towards this open. But what I mean is, what? If the idea is still correct and it's going to expand lower, we're just forming 2 reversal candles. So when should the expansion occur? The open of the next, right? So then this is one where it's like, I'm just generally expected to just drop. Ideally, there's S. Right? Does that make sense? Which time frame do you take your entries on? 3-minute or 5-minute? All right, where's 2-stage? I can't find it at the time and wasn't looking. I don't know. I don't use it currently. So if C1 hits a key level and C2 sweeps C1 low, but no other levels other than C1. Yeah, that's still relevant. It just means it digs a little deeper. So like we'll use this. This isn't ready. We're just drawing stuff because oh, not just opened up the FaceTime. Just glad it's not on full screen. Blast my face. All right. We're just gonna draw this, right? So we're just gonna draw it how we want it. Let's say we have this as a point of interest, right? And we're looking for this to trade in. And we see this reach into it, right? And your question is, hey, C1 engages this, but C2 sweeps it out. Can I still use this point of interest? Yeah, it's in that point of interest. All it means is that we just dug a little deeper into it. You forget, right? That's all it means. I'm still using this as a point of interest. It's not going to just disappear because it didn't react right away out of it, right? You took C4 H1 on NQ and C3 H1 RTY. So let's see. You took the longs on NQ, I'm guessing. Big O took that one. Nice long. And then you said RTY. RTY C3. So took that. Pretty sick. Well done. Doubled up on the longs. Yeah, I use 3 minute and 5 minute. When the 1 hour reversal setup happens during early London, how do you get onside with a New York continuation? So there's a few ways to go about that. One is you can wait for hourly swings or 30-minute swings. And the other is using 5 minutes to look for opposing candles in SMT. So generally, this is what it means. Here's the daily open. We trade lower. Your question is, here's London forming the low. Right? This is London. Yeah. And you're saying in New York, this area, how do I get on side with the move higher? One is to wait for a fractal model, so a retracement into some sort of point of interest, a 30-minute or an hourly, to then trade it higher, right? And you'll get that continuation. That's one way. Many times if it's just really expanding, that won't occur. If it's really expanding, that's where the fractal model will either miss it, or you can drop down to the 5 minute or so and just trade the continuation. Generally what I want to see with that is some sort of SMT continuation, right? Something like that. For NQ, if your criteria is met, for example, on M33, would you just take the trade even if CISD happens before New York Open by a few minutes? Yeah, I mean, if we form a protected swing prior to New York Open, I expect New York Open to expand lower. I'd have to go find an example. But generally, right, if we form something that I consider to be a protected swing prior to the volatility, then it should expand. If it doesn't, then 930 should make the low, then 10 should expand. In the course, do you teach how to trade C2? Nope, I do not. Do not do that because I'm trying to help people become profitable, not catch the very low or the very high. So it depends. Do you want your ego to feel good or do you want to make money? There's people that are very skilled and can do that, but for the majority of people, you're going to lose more often than not. So the 15-minute, 1 minute isn't ideal to you personally, correct? Not very ideal. And that's from just watching most people fail. The amount of people that I've helped become profitable by just saying, hey, maybe get off the 1 minute and go to the 3 minute or 5 minute. And they're like, wow, that's crazy. I'm not losing so much. Like, yeah, because you're not getting so zoomed in. Sir, can you go over the flow chart from the idea to the right part, left gray parts? All right, yeah, I mean, we can just review the flow chart, sure. So, oh, nice, RTY. Nice. RTY actually the cleanest daily setup here, guys. We can just use it on this. All right. So we'll use RTY. We have a directional bias. Well, how can I get that bias? I go to the daily chart. Here's the daily chart. What do I have? Nice candle 2 closure. So I could be bullish today. Cool. Now have a directional bias. Ideal. This is where I'm looking for a swing point to be forming or at a point of interest, right? Potential swing point formation. That means at a point of interest. So RTY, for example, here we have a swing low. Right, cool. Right, it's not loading. Let's keep it going anyways. All right, then I ask myself, okay, at the point of interest, we have a bias, we have a point of interest. Do we have a candle 2 closure? In this case, we do, right? Candle 2 closure here. So then what? Yes, we do have, right? Do we have a candle 2 closure? Yes. So then we go here, right? We go into here. So it goes level by level. Does that make sense? Here's level 1, not level 1. 1, 2, 3, 4, 5, right? Like that. So taking a look, we went from here, yes. Now we go to this one. Now we drop into here, and we see, do you have, I need to replay, otherwise it's, oh, there it goes, it's working. So here's a good example. Ready? We have the low, we have the candle 2 closure. So now if we're just following the flow chart, we've gone, we have a bias, have the idea, we have the candle 2 closure, which we go yes, or down to this level. Good. And then I say, is there a lower time frame change in the state of delivery in candle 2? Well, to do that, I go into candle 2 here. I find the low, find the series of candle that made it. No, I don't. All right, that's our first no. All right, now we're at this. So then no. So now I say, okay, is there a lower time frame change in the state of delivery that occurs in candle 3? Now we have to wait for candle 3 to see if it forms a change in the state of delivery. If yes, then I can enter within the current higher time frame candle. Oh, we just got it, so it means I can enter within what? Current higher time. So from now, I can look to enter, right? And so from here, this is where you can refine stuff down, right? We've met everything on the flowchart. This is where it becomes a bit more, not playful, but like you can choose how to do it. The easiest is wait for a change in the state of delivery, enter candle, right? But let's take a look at this, right? We take a look. Do we have a point of interest in here? No, right? Because price already retched into a fair value gap here and closed over. So what does that mean? I could refine my invalidation. This was our invalidation, right? Every time, and refine it to there. So knowing this is something where, hey, if I want to enter, I could just enter in here, put my stop there, right? If I'm expecting it to trade higher, I'm getting 2R prior to those highs. Right? I could do that or wait for a continuation. But what I mean is this is one of those ones where I need a point of interest. Do I have a fair value yet? No. Do I have a low? Yeah, but it's protected. I don't want to see this taken out. This is one where I can say, hey, I want to see 0.5 of this hold. I'm wanting to see this area in here hold price up. So one, I can either enter with my stop there or let a swing form in here and then get on side with that, right? Because then I'm anticipating this wick to it form. All right, that's looking pretty good. All right, there. We rush back into this. I can use this as a point of interest because I don't have anything else. We've closed over. This is where I can buy, put my stop at this newly protected low, or I anticipate, and then I need to get 2R. So in this case, 280, I need, what is that? 560, right? Which I'm getting 2R before that high. Cool. And then I just wait. Oh, new protected low. I could trail if I want. There we go. That makes sense? There's a whole top-down example for you. And that's one that's a little bit more complex, right? Because we don't have the fair value gap. We don't have the low in there. That's when we can use this, right? That's the only time I'm going to use an opposing candle is because none of the other ones are present, right? And then I waited for the intra-candle change in the state of delivery, bought the open of the new one. Why? Because I could get 2R before that. If price was all the way up here, does it make sense to buy my stop there and there? No. But because I could get 2R to those targets there, right? That's when it's fine. You can market that. I've been fussy waiting for only setups with CISD and candle 2. I mean, fair enough. If this one would have hung around longer, right? If it would have gone like this and then did it, that's when they fail. Because now it's consolidation, manipulation of the high to go low. Yeah, do I ever swing trades? Yeah, the last swing trade I did was on NQ actually. Was this candle. There. I just bought the close of this because a lot of times those just open up and they're already gone. So options. Bought the close of Friday, held over the weekend. But yeah, if you want to do swing trades, I would just use the daily and hourly, honestly. Like you can just sit on the hourly or the daily, wait for a daily closure, check once a day, and you're like, oh, I'll be trading it tomorrow. And you just enter on the hourly. I don't know the timestamp of the current stream. 54-ish minutes, 50-ish minutes of today. Someone wants to Watch it after. Do I use break even? Only after we've gone 2R. All right, I think I missed a few questions, so let me scroll up. Oh, I definitely missed a few. All right, I'm gonna try to get to them, but I do have another call here right after. And there's a flow chart, continuation entry. If there's one offered 10 minutes before C3 opens. Nope, I need to wait for the candle closure. I'm finding it difficult to decide what is the time frame to wait for candle 2 closure, whether H1 or M30 at key levels. If it's easiest, just wait for the hourly. If there's nothing on the hourly, then use the 30. Or if you're getting stopped a bunch on the 30 and 3, just only use the hourly and 5 minute. Don't make it super hard. Just listen to what your data is saying. Can you determine getting into trades that aren't within a premium and discount buy? So you might be newer here. I don't use premium and discount like that. So I'm not looking to sell. Like if we go back to this little RTY example, right? We're here on the, what was I, 3 minute? 3 minute? Or was I on the 5 minute? Right? I don't necessarily care where I'm at in a discount and premium. Like I almost always want to be buying in, use a gone box. I almost always want to be buying in a premium of the current range up. Where you could use discount and premium is of this range to our left. Right. I have about 700 trades showing. I have 700 trades showing my win rate is around 50%. I've plateaued and refining my win percentage. How should I approach that? That's a really good data set, and honestly, 50% at 2R is good. That's fine. I would say focus on not your winning trades, focus on your losers. What can you find in common? And right, finishing up stream, and I do have a call. Texted me. RTY is correlated with YM. If a CISD happened before the candle 2 closure, nope, wait for the candle 2 closure. I primarily trade NQ futures. I've learned that I shouldn't enter trades the hard way when price action is similar to what's yesterday. Yeah, if it's just consolidating and choppy, just stay away. Like I just focus on the daily chart. I haven't touched this because it's just not something I trade. Like look at the difference on the daily chart here with NQ. Right, like this, we're just expanding, kind of consolidating versus something where we actually have swings. That's where I'll engage. Right, so it's just patience. So when it makes a new high, that is when it becomes protected. So if you check out my protected swings video on YouTube, actually, that's really good. If anyone wants to link that. So. All right, if I missed your question, I do have to go. Just tag me in chat, in Fractal chat with it, and I'll just record some stuff for you guys after the fact. I just have this call and been trying to get this call for like 4 months. So we'll upload this stream and then answer any of those extra questions. What are the things you follow for long-term investments? I generally just look at the monthly and daily chart on something. So like for instance, I'm helping my brother right now in Ford. Right, and like if we go to the monthly chart, hey, guys, can you see my model on the monthly chart here? One, if we zoom out, I was watching this. But two, we just swept out these lows. That's our point of interest. And what? Did I trust any of these candle 2 closures in here? No. Right there. Aggressive down, aggressive up. So then come back in here. We have a nice aggressive down, aggressive up. Close over there. I can look for continuation. Right? Makes sense? Cool. And then from in there, it's like not crazy, but 16%. That's the first target because standard deviations is high. Right. Just a random one because my brother was talking to me about it today. He's in it yesterday. He's like, should I sell? I'm like, no. So anyways, see you guys next time. Like I said, for any questions, please just tag me in chat. Normally you can run late. We'll go like 30 minutes, an hour late. Just today, can't do that today. So, see you guys.